Good morning, everybody. It's Thursday, the 8th of December. I'm just going to give a cloud chart market review since the markets have moved quite a lot since the last update. Just a brief disclaimer here. It's not investment advice, pure research, cloud chart research. And on the agenda today is the weekly cloud chart market analysis for the 8th of December. We're going to look at the S&P 500, the Nasdaq Composite. Let me just write some notes here. Nasdaq 100, the Footsie. We're looking at the UK market, the DAX, and then the STOXX 600, which is very much the entire 80%, 85% of the European market, just to see where things are. We're going to pop over to the Pro Real-Time platform. I'm going to load my big picture market review list. And we're going to start with the S&P 500 here. We can see well extended from the overall cloud at a fantastic rebound here at the bottom end of the cloud support here that we touched on last time with the update. We've had a nice rally. We've had a weak cloud chart buy signal below the cloud. So that's really, there's two trades here, the rebound from the cloud support and then the buy signal above the cloud, when a weak buy signal is below the cloud, but the actual price is above the cloud. It then broke through the 2117.70. This is the S&P Spider ETF, resistance level. Then motored ahead to break past 219. I did a few Twitter updates on that breakout there. Retraced and then rebounded from there. Now we are ripe for a consolidation of this particular move. The overall long-term trend is still up on a daily cloud chart basis. So can see this market putting back slightly just to consolidate the recent move, but so far we have an uptrend in place on a daily cloud chart basis on the Spider. That's the Spider. If I can just recap the actual index here. There we go. Very similar, obviously, because it's the ETF here. A rebound from the bottom in the cloud support zone. Cloud chart shadow here, key support. We rallied, then found support at the top end of the cloud here and continued that move higher. Now this price is a little bit extended, quite a large move at the top end of the chart, so we could see a bit of a consolidation and pullback over the next couple of days. But overall, the long-term trend is up, so we just need to buy these pullbacks. And if you're a short-term trader, you could be looking at shorting the pullback in the market. Yeah. All right. Let's go look at the Nasdaq Composite Index here. Not broken out yet, still moving sideways. It recently broke out above the 5342 resistance levels, and then tried a 54, made a new high there at 5403. It's now retesting that old high after finding support here at a rebound at the top end of the cloud. I did tweet there as well about that rebound as a potential upside trade, so that was long there for the rebound, and now we're looking at a breakout past the 5403 level. So watch that level very closely over the next couple of weeks. Well, a couple of days, actually. So if we look at the Dow Jones, yeah, I expected a bit of a retracement back here because the other markets are pulling back for a consolidation. So we've not yet had this consolidation in the Dow Jones. Yeah, looks a bit extended now. Volume's looking good. Yeah, one has to really drill down into the individual stocks because there's a price-weighted index. Obviously, there's going to be some stocks that pull this index, skew the returns a little bit. But I expected a bit of a pullback back here already in November, but still, we could see a consolidation of this recent move back down to retest support here at the 9,100, 9,200 area. However, there's a upside. There was a point and figure chart target here at 19,300 that it broke past. And then above 20,000 is another point and figure chart target, but I do expect a consolidation over the next couple of days in this market. It's just too much, too soon, so to speak. And this is a tremendous rally just into the year end, so we could see a bit of a consolidation coming soon in the Dow. So a bit worried about that one. Now, if we're going to look at the Nasdaq 100, not broken out yet, still struggling to just maintain support above the cloud. We've just broken through the bottom end of the cloud. Yeah, we rebounded previously from old support areas there, so these were nice trades on the rebound. Broke through the bottom end of the cloud, broke through the top end of the cloud. Now we need to see a sustained rally above the cloud for the Nasdaq, but Nasdaq 100. Not a particularly good chart here because the front cloud is flatlining. That's giving an indication that we're not quite sure where we'll be going. So it is still moving sideways, and we do need to see a breakout of this high at 4,900. It needs to touch back, breakout above the 4,900 zone. So that's a key area that we're worried about. Okay, so not in the best of shape, so to speak. So let's look at the FTSE 100 index. Yeah, rebounded nicely from old support areas here. The September support areas here came back into play. The cloud became resistance. Back down to September lows. Now we're back up there at the cloud, and we're going to see if it's going to maintain this breakout above the cloud. This should come in as support 6,893. If it maintains that momentum, and then 6,900 and the top end of the cloud here is the next resistance area. But it's critical to see how this week's going to close off for the next couple of days, if it's going to stay above this cloud chart support area here and maintain its momentum back to 6,955 and 6,974, which could be another major resistance zone for the index. Okay. Turning to the DAX. Broke out of a trading range here, nice little breakout after rebounding from cloud support here. We can see this resistance zone comes from these cloud chart levels of 10,762, 10,858, and then the next key resistance zone is the top end of the cloud here. So the current rally, watch out for these levels as it broke past these 10,7062 area, 10,8570 area. These are resistance areas that are now broken. They need to come back in as key support, and the next level is 11,084. Okay. And then the STOXX to 600. You could just find it here. I don't think I have it on here. I think I have it on. That's the banking one. There we go. STOXX 600 also broke out from a key resistance area at the top end of the cloud. Now the cloud should act as support, so 34290 is a key support area, and as it's moving higher, breaking past key cloud chart resistance levels. The next level to watch for the STOXX 600 is the top end of the cloud here at 351 and 348. Okay, so watch those areas very closely to see if this upside momentum is going to be maintained. The cloud is now the key support area. Okay, I think we've covered everything there, and until next time, happy trading.